All right, good morning, ladies and gentlemen, and a very good welcome to every single one of you. Our sincere apologies, we've started slightly late than what we had anticipated, but we really appreciate your patience and also for making it here for this inaugural quarterly barometer that we are going to start today. So we are really delighted, and the theme is really to be able to get a view of both the local, the regional, all the way to the global perspective on what is trending, and also greater insights concerning the market. But before we start, I'd like us to start with a word of prayer. I'll call on Frederick Ouma, who is our Chief Internal Auditor, to open for us in a word of prayer. Fred, karibu sana.
All right, let's believe and pray. Father, Lord, in the mighty name of Jesus Christ and the Holy Spirit, we want to come before you this morning. We thank you for the gift of life. We thank you for your wisdom, your power, and your spirit upon our lives. King of glory, as we start with this event, we pray that your spirit shall guide us as we deliberate on the issues of NSC and the entire nation. We pray for your divine guidance. All glory and all honor be unto your holy name. In the mighty name of Jesus Christ, I pray. Amen.
Right, thank you very much, Fred, and also then we can already begin. So to kick us off, we have a fairly straightforward program where we'll have the opening and introductory remarks. That will be handled by our Chief Executive, Mr. Geoffrey Odundo. So ladies and gentlemen, it's my single pleasure to invite Mr. Geoffrey Odundo, Chief Executive, Nairobi Securities Exchange. Jeff, karibu sana.
Good morning. Morning again. So thank you very much. We're very delighted to be hosting you again. It's been a while. I know 2020, 2021, we did not have this quarterly briefs because of the COVID situation. But as you know, you're always welcome here at the NSC. We consider the media a very key stakeholder for us in terms of helping us provide the desired information out there to the investing public, and even holding us to account on a number of things that we do here. So we really appreciate that. Before we start, I think it's also important that I introduce my team, that members who are here, so that you get to know who at the NSC is doing what. I'd like to start with our new entrant, Bite Mwema. Bite can stand, maybe give her a clap. Bite is our Chief Business Officer. She joined us 1 month ago. It's now a month, and she's coming here to now spearhead our commercial side of the business. Thank you, Bite. We have Mr. David Wanaina, an old hand in the industry. David is our Chief Operating Officer, in charge of the infrastructure and also our data business. So all the data you see being disseminated comes from his team. Mr. David Wagema, who is our Chief Strategy and Risk and Compliance Officer. Mr. Kuria Waidaka. Kuria is our Company Secretary and Chief Legal Officer. And then Fred Uma is our Chief Internal Auditor. Behind there we have Yatani, who is in Business Development, and Bansri Patni, Business Development, and Boniface in Business Development. And there we have Martin and Wendy, who are from the Technology and the Corporate Affairs team. So as you can see, we really, really appreciate what the media does for us, and that's why we're here to engage with you. So this is a quarterly brief. We intend to do this more regularly now that we're back. But we introduced our quarterly economic reports, and we call it the barometer. And essentially what it does is to provide you with information as to what's going on in the markets, what's the global perspective, what are some of the initiatives that we have at the NSC, just to help enhance or to bring out more information about what we have to offer here and how the markets are operating. So it gives you more of a snapshot of the market, and I'll basically be highlighting key areas. But I know a lot of this economic data is out there, but I think it's also important that you know the perspective of the NSC on some of this economic data that is being shared. So we'll be speaking about the macroeconomics, we'll speak about the market resilience, the key market indicators. what is the performance of some of the products and initiatives that we have here. So on the macros, we have shared with you a slide there that shows you global data. And here we're looking at the global economy. As you know, a lot of the economies globally experienced a very serious downturn in 2020. And so 2021 was more like a normalization of this growth. So you see very good performances or very, very good growth rates in the region of 5.5% and above. But I think for us, this is a normalization of the previous impact of the COVID crisis. So on a global level, and these are the projections from the IMF, is that the economy is experiencing growth. We're seeing in April growth is being experienced at about 4.4%. And this is really right across all continents. In the US, we've seen good data coming on consumer price movements. Inflation has actually kicked up as well at 7.9%, but I think it's deliberate. It's meant to actually trigger economic growth. Generally, you've seen an upward trend in energy prices as well. When you go to Asia, China also experiencing some growth there. We'll go into the data. But largely across all continents, it's been an equal trend. The COVID cases seem to have been managed, though we are now witnessing a new surge happening, especially in China. So we are not out of the woods, but I think generally the vaccinations and also the containment measures have yielded very, very good results. So the IMF projections show that in 2021, we grew by 5.9%. We're experiencing a 4.4% projection in 2022. To my point about normalization. So the high growth rates, in our view, has a lot to do with the normalization. And even across Europe, where we are seeing 2021 had a better performance and 2022 is now tapering off slightly. And right across America as well as Sub-Saharan Africa, the growths are being experienced as well. So in Kenya, we are saying that according to the projections for 2022, estimates are that we'll be having a GDP growth of about 6%, inflation at about 5.39%, and the central bank will hold the rate, continues to hold the central bank reference rate at about 7%. In terms of global currencies, we've seen the strengthening of the dollar against most majors. And basically, it's a factor of heightened risk. So during times of heightened risk, there's a lot of flight to safety. So the US dollar bonds are considered relatively safe, and hence there's a huge demand for dollars. And that's what you're seeing, a slight strengthening across most of the currencies. In the global capital markets, it's important to talk about Russia, because that was the surprise. We call it the black swan for this year, the Russian invasion of Ukraine. And this led to a closure of the Russian stock exchange on the 24th of February, and hence also a dip in its performance, and that's been very, very impactful. We continue to see volatility, especially in the oil prices, because Russia is one of the largest producers of oil, and also the interruption caused by this crisis, especially towards manufacture of raw materials. It's come to our attention that we do actually have a lot of raw materials which are imported from Russia and Ukraine, and hence these has affected part of the global economy. Looking at the returns in Africa, there's been better returns experienced in Nigeria, Mauritius, and South Africa. Whereas in our region, we had slight dips in the returns from a return perspective, with us Kenya recording a 3.8% drop in returns last year, and largely as a result of the devaluation of most of the stocks that were in our market. On the converse of this, we see market cap to GDP. We still represent about 25% of our GDP in Kenya, which is, well, I would say a fair comparative, with only Morocco sort of beating us to that, and South Africa, which of course is almost 4 times the economy. But it's a very important data that we look at, because we believe that the market should reflect really the economy. And our intention is, as we grow our market, as we increase the number of listed companies in the market, as the valuations improve, our target is actually to get to 50% of GDP. And that's why we're putting a lot of effort towards our product development and also infrastructure improvements that we've done in the past. Looking at this chart basically provides us with a snapshot again of the returns, as I've said earlier. So it's just a mirror of what I just presented, with again Nigeria representing the best performing market in 2021. A bit of a focus again on our indicators, economic indicators. CBR has been held at 7%, and I think the central bank has been very deliberate about it and intentional about it. And it's largely for us to ensure that we are not able to cause spikes in pricing in the country, and hence that stability has been very important. I think we're also sitting on a very comfortable import cover, which is almost 4 times. We have got 4 months of import cover, which I think is adequate based on our projections. I think the debate still die about our debt to GDP ratio. Recently you saw there's a plan to reverse, as opposed to having a debt ceiling, to go for a debt anchoring approach. And we're waiting to really understand that model and how it operates. But looking at our debt situation, I think a large portion of our debt is still multilateral and bilateral lending. Then there's domestic lending, and also then the commercial lending. So we believe, or we hold the view that yes, the debt has grown, but I think in terms of debt service, I think the government is still very capable of doing debt service, because a lot of that debt is still multilateral and bilateral borrowings. The Kenyan shilling against the US dollar has actually weakened. And I must say that this is really in trend with what's happening in the global economy. With all these heightened fuel prices, the heightening global risk, the strengthening of the dollar, I think also it's really in trend to see this shilling also weaken a bit to about 114. And really we are basically watching on how that portends. But I think it's data, or I think the arguments are best judged by, argued from the central bank's perspective, and I think it's been fairly stable in our view. Real sector performances, as I said, we are seeing recovery across all sectors. We had a very huge impact on some of our key sectors, especially tourism and sectors that are reliant on imports, and that was in 2020. But again, there's been a general recovery. Tourism is back, very strong domestic tourism, especially on recovery. We're seeing increase in passenger arrivals across the board. I must say I was happy to see arrivals even in Mombasa of direct flights from, say, Ethiopia and Emirates. So you can imagine that's really a very encouraging space that's opening up. The finance and insurance sectors have been performing extremely well. I think most banks last year recorded extremely good returns, and largely because of lower provisioning and general growth in top line, which again is a good signal to that. Real estate and buildings and construction is also on an upward trend. We're seeing improvement in trades, agriculture as well, and so I must say all the real sectors are performing, and this is very reflective even in the terms of the performance of all these companies. Even if you look at the reported returns in 2020-21, generally most companies did very well in 2021. Expectations going forward is that we are looking at strengthened growth across all sectors. And Kenya, being a very diversified economy, then stands a very good chance in terms of taking advantage of these new presenting opportunities. We're pretty excited about new areas like technology and telecommunication, which is becoming a very huge opportunity for investment, both for private and public markets, and hence this is an area for us that's going to be a key area of focus, the tech space. And just across a good performance across all sectors. So I think the real sectors are showing a good signal, and this should be presenting a good direction for us going forward. A bit more on the market analysis. The market cap for us is at about 2.4, 2.5 trillion. It's been playing around there. But I just must point out that last year we experienced our highest market cap at some point of about 3.1 trillion, which was a milestone, though very short. We are very hopeful that we'll see this recovery again. Now, last year as well, we recorded our highest bond trading performance for the whole year of 956 billion. Why am I saying this? I think this is very important information that shows you the resilience of this market, that even despite a very difficult 2020, in 2021, we showed high levels of recovery across those two key markets, the highest level of our market cap and the highest level of our trading performance. And even the level of outstanding outstanding bonds hit the 3 trillion mark. So pretty exciting times around there. Generally, the index, of course, still below the 2,000 mark on the NSE 20, but again, it's really an indicator of the discounts that are in the market at the moment. We always look at this from what opportunity does it present. We don't look at the index drop as really a crisis. I think it just presents an opportunity for you to take advantage of, because when you look at the index, look at it in the context of also the factoring in the price earning multiples as well, and the price to book multiples, because that should tell you that these companies are performing well, and it's only a factor of price. The price is highly discounted. So if you see a multiple of about less than 10, at about 8, that means the earnings vis-a-vis the price is only 8 times, and most markets are in multiples of around 12, 13, and 14. And yet, our markets are providing those very attractive multiples. So just to give you highlights on that. Now, last year as well, we had our derivatives market having its second full year of trading. The volume hasn't come yet. But what excites us about this market is its functionality. Okay? It's functioning. You can imagine this is a market which is new. The only derivatives market in Africa is the JSE. So they have a derivatives market, but it's 20 years old. Okay? But we are experiencing the normal functionality of this market. So daily margin movements, new contracts being introduced, pricing, closures, you know, those contracts, expiries and new contracts coming in. So the whole infrastructure ecosystem is working extremely well, including the clearinghouse, just making sure that the clearinghouse is functioning. And so for us, we are really pushing an argument for volume, especially institutional. Because what do derivatives do? You know, a lot of people are still stuck in the global financial crisis of 2008. And we are how many years since then? 14? The global financial crisis was precipitated by over-the-counter derivatives. Over-the-counter derivatives are the ones where you have a bilateral agreements, all right? They're not exchange-traded derivatives. So those are the ones that didn't have clear safety nets, things like settlement accounts, margin, how to store margin, how to reserve margins, etc. That was not there. But in an exchange-traded derivative, the risk matrix or the risk framework has to be very clear, and that's what we put in place here. So these products are a very good hedge for you if you have an exposure in a certain stock, for instance. So if you have an exposure in Safaricom, you can actually hedge that with a derivatives contract to mitigate the downside risk, isn't it? Now, this is what we're arguing, especially for pension funds, insurance companies. You can reduce your losses by buying derivative contracts, and hence it provides that great opportunity. On top of that, it's a tradable asset. So if you're looking for a high momentum tradable asset where you buy and expect your funds the next day, they're derivatives contracts. So this is one market we're very, very excited about. We want to encourage a lot of investors to come through, especially the youth and also institutional clients, to really take advantage of these contracts, because there's a lot of opportunity here. And we've put in place a market making framework So there's always a counterparty that can take you out if you have a position. All right? So we've provided that together, and it's actually in place. The bond market performed extremely well last year, as I said, 956 billion in trade and 3.12 billion in outstanding bonds. So a very strong market. And I'm happy to say that a lot of this has been retail, whether they're coming through the unit trusts, where they come through direct wealth management accounts, or even direct retail participation. It has been encouraging. And I must thank the central bank for really issuing bonds on a regular basis, and better still, even the infrastructure bonds, which are tax-free. And Kenyans have really participated in those. So that level of knowledge has come out, and it's very encouraging to see that coming through. And I really applaud central bank for helping that happen, and helping the country raise the required money to run the country. Looking at the sectors, I think last year we saw a good performance in all our sectors, especially the motor sector, where the best performing company from returns was Car in General. But if you look at the yields on the bonds, on the stock market again, the yields, most of our stocks last year have given yields of above 5-6%. In fact, some have gone as high as 17%. The NSE stock last year paid a dividend yield of 17%. Now compare that to having a fixed deposit account. It's incomparable, isn't it? To get yields of over 10% in an equity asset is a very good premium, and that's why we're arguing that stocks are a good asset class for investors to really invest in, even at these times. The Gold ETF, our Gold ETF performed extremely well last year. Good trading volumes there. We experienced some good turnovers as well. Price to earning multiples. This market is very undervalued. I think we're looking at an average multiple of around 12 times. And that 12 times factors in the high multiples and the low multiples. And that shows you that there's great opportunity also in the market. What are some of the strategic initiatives that we've put in place? I think it's important for you to at least refresh yourselves so that as you communicate this, you're aware. One, we introduced day trading. So day trading is the ability for you to buy and sell the same position the same day. So you could buy a stock in the morning at 9:30, sell the same stock at 10 o'clock. We have seen a 3% growth in turnover from that particular activity. Okay? So you don't have to buy a share and hold it for 3 days. You can buy it on the same day. If you get a good exit price, you sell it. We have discounted the fees for the second leg to make it more cheaper for you, and we're going to be bringing more incentives around it. Last year, we also launched the Bonga Points for Shares. I was having a lot of discussions with different professional groups in the last few days, and I realized a lot of Kenyans are holding Bonga Points in their phones as Bonga Points, right? So we are not using those for buying phones or airtime. So I think we better take advantage and convert these into shares, and that option is there. And so we want to encourage Kenyans to really take advantage of this. A lot of education, a lot of communication will be happening around it. For every 5 Bonga points is equivalent to 1 shilling. So that is an attractive option as well. And we want to encourage people to do that. We're also working with our partners, the CBK, in their development of their new CSD platform. We believe this will make the markets more efficient. Right now, they're very efficient. I know there's a big debate about the second bond exchange in Kenya and what are we thinking about it. I must say we heard about it a long time ago. And so we have continued to do our business just to improve our infrastructure. And we wish them well. But yes, we are ready for any competition, and just like anybody would be. But we believe that we can grow the market, and the market will grow using our continuous improvements of our infrastructure. And then the other key initiative is on the environmental, social, and governance. Last year, we gave this guidelines to the market for voluntary compliance. So today, as a company, you can actually start using that manual to conform to international ESG standards. It's still not compulsory in Kenya, but it is a good practice. And a lot of companies are now doing that because there was a big challenge for most companies because of the costs. But now with that compliance module, it gives you like the beginning of a journey towards full compliance with the ESG standards. Our intention is to actually set up a sustainability index where companies that are in full compliance with most of the standards will be members of that index. And this should help improve the performance and interest in their stocks from various investors. Market performance. I think we've seen good activity. Now, for a long time, and I even read in today's paper, that is an attrition of international investors, that there was an outflow of international investors. Let me say, when there's an outflow, there's an inflow, because the market is two-way, right? So our local investment activity has increased, as you can see, from 56%. Last year, 56% of our trades were international, 44% was local. I think it's a very good number. Do you know we have a target on retail to foreign participation? And our aim has always been to get it at 50-50. Why we do that? We do that because we believe that if you have a very high concentration of international investors, then you're likely exposed to a lot of the global volatility. But when you have a stronger local participation, it sort of counterbalances that and manages that level of volatility. And so 44 is a good number. So there's nothing to worry about. When you see outflow, that means there's a inflow. It's not so foreigners will come back. They take positions. That's a level of activity that happens regularly. But I am happy to see that our local investment pools have grown. Unit trusts have grown for retail. Pension funds have grown. East Africa regional investors are here. We've got very good investments from Rwanda, very good investments from Uganda. The East African pool has grown, which just then means that the level of participation has gone up. I think you can even see this year, by March, more local than foreign. What concerns us, though, is the volume of activity. Okay, so it could be 100 million volume trade. That's what worries us. All right, we want to see 1 billion volume trade. It doesn't matter whether it's local or foreign. So the number that we are more attracted to is what turnover are we doing per day? Not whether it's foreign and not whether it's local. What turnover are we doing per day? And that's where we are putting more of our focus on. On the bond side, you can see the turnovers, again, we're slightly behind last year, but I think it's because this is really the start of the year. But generally, as at now, we are at about total bonds traded is about 243 billion, and last year, same time, 243 billion. So it has sort of evened out. But remember, last year, we did 956 billion for the full year, and we're pretty confident that in 22 rather, that our bond market will perform well. This is a very important slide. It's to do with the elections. How do markets behave during elections? So we gave you a two perspective. We looked at 2013 and we looked at 2017. The blue bar in 2013, which is encircled, is actually the bond market, and the green bar is the equity markets. If you can see in 2013, that was the performance. And then in 2014, you can see what has happened. The markets have risen again, isn't it? And 2015. So these markets generally trend up post-election. Pre-election, you'll see the markets experience some level of volatility, turnovers decline to some point, but after that, normal recovery sets in. So what's our view about 2022? It will be similar. It will be similar. We believe there'll be more volatility as we head to the elections, people trying to watch what's happening, and after the election, we'll see very strong recovery. And that's the view we're taking. What does that mean? It means this pre-election is a good time to buy. I don't see why we should buy. We should buy at high prices. Buy when the prices are low, sell when the prices are high. And that's the argument we're putting forth, that now is a good time to buy. There are very good discounts in the market. Most of the stocks right now are actually trading come dividends, meaning that on top of a dividend, if you buy the share, you'll get a dividend at book closure. And it's still trading at a lower price than even before the dividend was declared. Very unique phenomena. And so our view is that this is a good time to buy. The market is undervalued, and hence we are taking the view that we'll see a very strong recovery after the elections. And that's the view we've taken, and I know, based on our historical performance, that has always been the trend. I'd now like to invite David to speak to market performance, and then invite Bite to speak to products. David.
Our CEO and our leader, Jeff, colleagues from the NSE, our friends from the media, good morning. Good morning once again. My name, as earlier indicated, is David Wainaina. I'm the Chief Operating Officer here at the NSE. Now, our scope involves having the liquid infrastructure that should be able to support all this business that the CE has spoken about. And I want to say that right when we started the year 2020, no one knew that in March, COVID will knock home. And the markets are very, very sensitive to external shocks, so to speak. So come March of 2022, the index was trading at about 2,300. Then the first case of COVID is announced. And what we saw from a market perspective is the market lost in paper money around 118 billion shillings, because the market cap on March 2020 and March 21st moved from around 2.3 to around 2.1 billion shillings. A trillion shillings rather. This means that the market really reacts on external shocks. But what we have done as a market is just to qualify that, as the CE has said here, that means an opportunity for an investor. If you look at the trend that we have walked, it's March 2020, the index is at 2,300. Come November of that year, the index is 1,750. That means that in terms of the price erosion, on account of that, external shock, the market lost around 23%. As at yesterday, the index was trading at around 13.16. So you can see the journey we have walked. We have moved from 2,300, we have come down to 1,700, now we are at around 1,800. Markets are also driven by trends, and the CE here has just said what our feeling is around the political environment and the upcoming elections in August. From an index perspective, the levels we are witnessing now of 1,800 were last witnessed in the market in January of 2005. That's 8 years ago. But again, as the CE has said here, if you look at the profitability side of the market and the price side of the market, there is disharmony. So at some point, the market will price based on fundamentals. And that is exactly what the CEO was saying. And he has pronounced that from where we sit, we think that the time to be in the market is now. Buy and wait, don't wait to buy. So what we are doing to ensure that we are supporting the business from that perspective, infrastructure and technology forms a very significant element of our 2020-2024 strategy. So the business had to invest in an extremely robust system. This system is supported by the Millennium IT, and this is the providers are part of the London Securities Exchange group. This is the same system that is used in South Africa, It is the same system that is in London Securities Exchange. So we are very confident, based on our strategy as exchange, to grow the listings, you know, to grow additional products. I'm very okay because I also have a backup. To grow the existing products, we are certain that the system we have in place is a system that should be able to carry us forward to the next strategic period as the market, because we have an objective as an industry to move from the frontier status to the emerging status. So the system we have is extremely scalable, and that informs what our CE has just said, that we were able to bring in day trading within a year of the upgrade. And this day trading is what the market has been calling for. As Jeff has said here, our CE, day trading activity is accounting for close to 3% of the total activity. So, and this is within the 6 months of operations. So going forward, we want to inform investors to come into the picture. Again, as we have said, we have a deliberate approach to grow our, retail space. And the intention is to ensure that currently we are operating on 70-30, 70 being foreign investment, 30 being local. Day trading and the issues around bonga points are what will entice investors to come into the market. The second point I want to make here is that we are digitizing the whole ecosystem of the market. We started those many years ago with having a trading system. We then had a depository. We have now gone to the back end because every broker has a broker back office system. And now we want to go further, and we have started that journey by connecting to this market through our licensed brokers. And that's why every broker today, most of them, they have trading apps. So the access points are what is going to inform further innovation into this market, because as we move along, our intention is to ensure that trading is a straight-through process. Today, everyone here has a phone. So the intention is whatever you are doing, you should be able to access this market from a straight-through process, because days when we used to come from different counties to come to invest in shares in Nairobi to open account are long gone based on our digitization maturity. So those are some of the initiatives that we are doing on the equity space, and we believe we should be able to achieve our target and migrate this market and graduate it from a frontier frontier to an emerging status. And what that means is that we shall have a lot of capital call into the country. As Jeff again has said in here, this is the biggest market within the region. So foreign investors who want to access the East African region, they would first point into our market. So the market is deep, the market is rich, and what the CBO will be coming here to tell us, you will see there is also a lot of focus to grow the, the supply side, because listing is a key agenda for us. As I conclude, you have had a very good narrative on the fixed income segment. And currently, we are working very, very closely with the Central Bank of Kenya, who hosts the government bonds, to ensure that we have that very mature interface. And our intention is, as and when that CSD at the central bank level is live, we should be able to support products in the bonds, including, market making for that facility. And these are some of the initiatives that the market wants. When we have market makers in that section, then we shall be able to graduate our bond market from price-driven to quote-driven, meaning that when you come to the market, you should be able to say, I want to buy a bond at 10%, and I want to sell it at 11%, and you make your spread. So this is what happens in, emerged markets. So we are pointing to that direction. We have the plan, and we are sure in the fullness of time, in line with our 2020-2024 strategy, we should be able to get there. Finally, we know the role that these systems are performing in terms of ensuring that the business is available. The business has invested heavily in information security. Within that strategic period, the business has committed in excess of 60 million shillings just to ensure that we have a very, very mature cyber framework. This is in addition to other, investments that have been done. We have a very mature, cyber security center. that ensures that there is real-time monitoring. And that's why even when we were operating 100% off-site during COVID, the market was not interrupted. So the assurance we want to give the market is that we have the requisite infrastructure and we are ready, and around the continuity arrangement of the business has gone further. The best practice is that as an exchange, which has been qualified as managing a critical infrastructure in the country by government, you must have a disaster recovery site. I want to confirm here, for purposes of our investor confidence, that we do have that site. That site is in excess of 40 kilometers from where we are sitting, and the international best practice qualified 10 kilometers, so you can see we are already moving towards an emerging status. And with all those initiatives, once again, the assurance is that this market is ready. As it has been said, you have heard the narrative around the NSE 20 share index. The time to come to the market is now. Thank you very much.
Right. Thank you very much, Mr. David Wainaina. I think the assurance is there. We have a robust infrastructure and we are secure with all our security that has gone into investing into making sure that the trading platform is secure. And also, like Jeff did mention, from the global, I think the rallying call is clear. Now is the time to actually look for value within the market and to discover opportunity. Without much ado, she was introduced earlier on. We have our new chief in town, so we call her our chief whip. But for the purposes of this, she's a chief business officer. Mbithe Mwema, ladies and gentlemen, let's put our hands together for her. Mbithe, karibu.
Thank you so much, Wagama. Good morning again, everybody. I can see very many familiar faces. I used to be on that side, so I'm very excited to be on this side. Again, my name is Mbithe Mwema. I recently joined the Nairobi Securities Exchange as the Chief Business Officer. I think of coming at a very exciting time. The markets, in terms of the statistics, they look down. But when things are down, it could actually be an opportunity for you to buy for the long term. Over and above that, in my current role as the Chief Business Officer, I've actually come and met a very vibrant and passionate group of people. They're at the end of the stage, right around me. I think they've been introduced. I work with Mr. Rufus, I work with Agnes, I work with Ali, I work with Bansri, I work with Boniface. They're such great champions of the products that they do. So it's a privilege for me just to walk you through the alternative products that we have at the NSE, over and above trading in bonds and shares. So I can see it's up there. Just give me 1 second. So I can get onto our products. So over the last one quarter, looking at first quarter 2021 and first quarter 2022, it was a very exciting and vibrant market when it came to bonds. We actually saw 3 companies come into the Nairobi Securities Exchange to raise corporate bonds. We had Family Bank, East African Breweries, and the Kenya Mortgage Refinance Company. Now, this was very exciting for us because if you actually look at the navy blue line, that's what the companies were looking for. However, on the light blue line, that's what the market was willing to put into these investments. Family Bank was looking for 4 billion shillings, and it attracted 4.42 billion last year. East African Breweries was looking for 11 billion, and it attracted 37.9 billion. And early this year, we had Kenya Mortgage Refinance Company seeking for 1.4 billion and raising investor interest of up to 8.11 billion. Now, what I found interesting, and this is aligned to the conversations that we've had on this podium, was the element of return and the return that the Nairobi Securities Exchange offers you. What we did, we compared the coupon rates for these corporate bonds with a similar paper, a 1-year T-bill at the date of issuance. When Family Bank came to the market, the coupon was 13%. In other words, if you invested in Family Bank as an investor, you would have been earning 13% per year for the next 5 years. If at the same time you had invested in the Government of Kenya Treasury bill for 1 year, you'd have been earning 7.72% at the time. The trend continues. Similar case with East African Breweries. When they came to market last year, they had a coupon of 12.25%. That is, if you invested, you would be earning 12.25% every year for the next 5 years. Conversely, if you had invested in a 1-year treasury bill, you'd be earning 8.49%. And finally, Similar case with the Kenya Mortgage Refinance Company, 12.5% was the coupon. At the time they came to market, the 1 year was at 9.77%. Now, it's important for us to appreciate that beyond just trading equities on the Nairobi Securities Exchange, we have seen interest in trading corporate bonds. But more importantly, some of our alternative products are actually addressing the funding gap when it comes to small, medium, and large enterprises in Kenya. You can see from this demonstration that for any company in Kenya that's looking for additional debt over and above your typical banking debt, it's more than welcome into our market. If you are an investor that is looking for a higher return, you're more than welcome. And I think the beauty that I have found in this particular product is if you are looking to raise capital to expand your business, you raise a corporate bond, you pay back the principal in 5 years, you're only left with the interest rate payments on every 6 months or at least twice a year. I think when we talk about SMEs in Kenya today, or medium and large enterprise, if not only looking to list, this is certainly something that they need to consider when it comes to their capital funding for their expansion. Another interesting product that we have with regards to the intervention in the SME sector is the Ibuka. The Ibuka program, which means Emerge, is actually a capacity building program that has been rolled out by the NSE in partnership with various institutions. Now, the genesis and the spirit and the ethos of some of these products is the fact that we have come from listing large entities such as Safaricom, are cognizant of the fact that the majority of the entities in Kenya today are at the middle, small to the medium sector. So the NSE asked itself, what can we do to contribute to this particular sector? More importantly, how can we enhance the capital raising journey by working with you hand in hand, enhancing your capacity locally, helping you understand this process, and bringing all the advisors that you need around you. This is what the NSE Ibuka does. It gives you capital market access, gives you an array of advisors, transaction advisors, lawyers, investment bankers, any person that you would need to culminate any transaction in this market. It gives you visibility. We know and appreciate the NSE with regards to how it has championed capital markets. So you being part and parcel of this means that you're actually riding on the NSE brand and engaging with a broader set of stakeholders. Value discovery, that has been the most exciting thing about the Ibuka program. You can come in and say, I think I'm 50 billion, but then you walk in and what we like to say, vitu kwa ground, could be different. So this particular program helps you to align, what do I think, what do I expect, where can I go? If you're an SME in this country, this is something that you want to consider because you cannot just rely on debt from banks. We need to be able to grow your businesses and the kind of capital that you need. Equity capital is found in the exchange and we're more than happy to walk this walk with you. This is an overview of the companies that we have in our program. It's quite a vibrant list, and I think what has been most exciting, you can see up there, is the likes of AA Kenya. You've probably seen AA Kenya and interacted with AA Kenya in the press and seen what they are doing. They are actually going through our Ibuka program and trying to see how they can enhance shareholder value through the different products that we have at the NSE. Of our universe, we are expecting at least 2 issuances, one of them either raising debt and another one a listing. So if you are a small and medium enterprise and you're saying, I am ready to actually grow my business and expand it, then you need to be part and parcel of this conversation, because what we are telling you is continue with your debt capital. It will sustain your operations on a day-to-day basis. However, there is an opportunity for expansion and growth. You need to be with us at the NSE. We walk with you through this journey and show you how it's done when it comes to raising capital. Another exciting product that we've already covered was the derivatives market. So just giving you an overview of the derivatives market, a very new product, 2 years in place. What we find exciting about this product is the fact that we are in a market that is 75% made up of people who are 35 and below. And even as I look at most of us, we are pretty young. So the younger population is trading a lot on their phones, either trading Bitcoin, trading foreign currency, or trading stocks outside of the country. What we are saying as the NSE is, if you already are trading in that space, derivatives are for you. You get access to stocks at a lower discounted price. You can actually come and trade the market, and you can even do over and above that, get into the day trading activities that we have as the exchange. So if you are looking for return, if you are looking for new products, if you're already trading high-risk products, derivatives are an interesting thing for you to consider. Second thing we say about derivatives is for institutions that have large portions of their assets held in equities. Derivatives are a good hedge, especially when there's an indication that markets are coming down, as has been the case of our market softening. What we have so far is we started with equity future contracts structured on the NSE 25 share index, and we had also contracts on 6 counters. I'm very happy and excited to announce that in a month's time, we will be adding 4 new counters onto our derivatives market. These counters, NCBA, Cooperative Bank, Standard Chartered Bank, and I&M Bank. And as I engage with my team members and asked them, so what does this mean for us? Their eyes were lighting up because they said, there's more visibility, there's more access to the banking stocks. And over and above that, rather than buying a banking stock for 200 at the derivatives market, you get it at a good discount. If you want to know how to do this, my team members are around. I'd encourage you to talk to them, engage, and find out how you can be able to make a return using some of our products. ETFs. We have ETFs, and the current ETF that we have is the ABSA Gold ETF. Now, this has been doing interestingly well. What we did see is anytime there's any issue that comes up at a macro level, for instance, when COVID started and then again the Ukraine-Russia war, we actually saw an uplift on gold. Gold tends to be a very natural hedge. If anything is happening and there's volatility, we go to the safe assets. The gold ETF has been a proxy of that safe asset, and its listing on the Nairobi Securities Exchange actually directly tracks the value of gold on the global commodities exchange. We've seen interest from high net worth individuals, interest from chamas, and we've been seeing it growing with regards to volumes. Now, our volume here is really on the first quarter 2022 versus the first quarter, but what we did realize is that in second quarter and third quarter last year, there was increased volume. However, for purposes of this first quarter economic barometer, the turnover was 101 million for this first quarter in 2022, compared to 54.1 million a similar period last year. It's gaining traction. It's an attractive way of being able to hedge against risk, especially if there's any volatility or choppiness in your market. Now, this is our newest baby, and because I'm also the newest at NSE, I'm very excited about this particular product. It's called the Unlisted Securities platform. So what it does, this actually targets unlisted or unquoted securities. In other words, what the NSE appreciated, it said that not all companies might be ready to come into the public space, the likes of Safaricom, how it did in the IPO, or even NSE in its IPO. And NSE looked and said, there is a smaller bracket of entities, whether it's small SMEs or medium enterprises, or even SACCOs, or even OTC companies. There are people who are already trading shares. And we said, come and get onto our USB platform. Let's trade your shares. Let's give you that visibility. Let's facilitate that process for you. And more importantly, give you price discovery. And one of the things that we've actually appreciated about this product in our interaction with our members, especially from the Ibuka, is the fact that it helps you address what we call the illiquidity factor. Now, typically, when you're doing a valuation and you're engaging with investors, if you're not listed on a market exchange, they would actually say, let's shave 30-40% of your value because we are not too sure about the market value of your price. However, if you are listed on an exchange, you actually then can negotiate and say, instead of cutting up 30 to 40% on my valuation in our negotiation, I'm already on the unquoted securities platform. So it gives you price visibility, and it actually enhances your negotiating power with future or potential investors. Private companies are open to come into this space. Cooperative societies are allowed to come into this space, as well as the OTC. Our biggest beneficiary in this market has actually been the ACON. The development REIT and the investment REIT has been trading on this particular platform, and those are the turnovers that we have seen since inception, and it's been an interesting place for price discovery, as well as opening up a new element of investors through some of their products, such as the VUCA product, which I would imagine you are well aware of. As I come to the final part of my conversation, the final thing we wanted to talk about is the real estate investment trust. We didn't have any trusts that came onto our market last year. However, we wanted to just give you a sense of what these are and who they are made for. We have the development REIT and we have the investment REIT. If you're in the development stage of any real estate project, this is something that you want to take. If you are actually getting into a project and you want to be able to be earning rental incomes, then an investment REIT is what you want to look out for. And what we have seen is that Aecon has actually been able to take and participate in this particular product, and they've been able to raise funding. The other product that we wanted to talk about is the green bonds. So as we had alluded to earlier, ESG is a key parameter and barometer for us at the Nairobi Securities Exchange. We are working to see how we can blend finance with socially acceptable standards and ways of engaging with our environment. We have a green bond. Nothing was done on the green bond last year. However, in 2019, we had our inaugural issuance from Aecon. And when we talk about all these products, what we are seeing and the trends that are coming out is we are seeing issuers coming to us and saying, how can we use the alternative products from the NSE to raise capital to fund our businesses? So that's where we stand today. Not only do we do equity listings, we also do debt listings. If you are in the real estate sector, you want to be talking to us because D-rate and I-rate would be fantastic for you. We have at least one or two that we are engaging with the hope of turning this around as we go towards the end of the year. The final part is on equity listings, just a reminder of what our markets are. And anytime I think about listings, I think about it in a rather different way. When I look at the statistics, we look at debt, which is 3.2 trillion in Kenya today. And if you actually said you're a financial analyst, I'd ask myself, if I was looking at a company, would I want this company to only be levered on debt alone? Or would I actually want it to consider the element of equity capital, shareholder capital? Then I asked myself, if this company was to have shareholder capital, for argument's sake, even 50% of the debt that it has, then I said, then that means the Kenyan corporates should probably be having capital of up to 1.5 trillion because they already have 3.2 trillion in debt. I know this is a dream. Hopefully it will happen in a decade. But when I look at where we are at, things that such as the African Free Continental Trade Area and looking at DRC, which has become a member of the East African community, then I see a great opportunity for Kenyan corporates to not only go into those markets, but to expand into those markets. Expanding requires expansion capital. Expansion capital, we are more than happy to be able to work with these investors to be able to usher them into the NSE so that they can be able to address this element of growth capital and get this through equity issuances. So we are excited about the future ahead. We are here to be with you. We want to listen to you to hear what your needs are to engage, to enhance the growth of the Kenyan business community. Thank you so much for your time.
Thank you very much, Mbide. I think that was really eloquent and also well articulated, and of course key insights that she's been able to bring to us. So thank you very much. We really appreciate, and of course that was her maiden speech to media. So again, another round of applause for Mbide. Yes, thank you very much. Yeah, so thank you very much. Ladies and gentlemen, we'll now segue into the question and answer session. We already have some of the questions that have started coming in, and we also have our viewers online. We have not forgotten you, so we are part and parcel. In fact, the first question has already come in from an online guest, and for the people who are here, we have a roving mic, and Miss Wendy Boit will be around to be able to bring it to you. But to start us off, we'll begin with the online question. The online question was from Julian Amboko from NTV, and the question is: seeing how firms are toying with share buybacks, does the market really have promise for growth investors? What's the underlying issue with market book valuation? So I'll repeat that again, and also I'd like to acknowledge the presence of our chairman, Mr. Kiprono Kitonyi. I'll invite our CEO to invite him. Thank you very much. Thank you.
Thank you. I think we'll invite the chairman after the Q&A to also give us some closing remarks. Yes, so I think we'll take the questions, but I think just before we go for the questions, to speak about two things about our regional strategy. So as you're aware, we have invested in the Dar es Salaam Stock Exchange, and as a NSC, we will continue to take strategic investments in institutions that are related to our business. So we have taken an investment in the CDSE. We are now at about 40.5%. and we've invested in the Dar es Salaam Stock Exchange. So should you hear of an IPO being done, an exchange listing will be of interest for us across the continent, and that's a position we've taken. So I think we'll take the questions. The first question was?
How the impact of the share buybacks, and what is the proposition for growth investors, and what are the underlying issues with the market valuation?
Okay. So I think with the amendment to the Companies Act, share buybacks is now allowed. We've seen the first one that happened here, the Nation Group buyback shares. The objective they had was to see their price improving. They wanted to shore up the price because they felt that it was trading at a very huge discount, and they thought of then mopping up about 10% of the float of the market. What we've seen is that there's definitely a price improvement on that counter, but there's not been too much impact in terms of trading volume. So we're happy to say that the trading is still going on. I think they did a good thing to reward their shareholders, but I think it's something that we will say it's really dependent on the company's decision. It's as a market, we would want to encourage more free float. We'd want to encourage more free float. But it's something that we must allow markets to also innovate. So whenever there's somebody would like to do it, we can stop them, but we want to see more free float. For the Nation one, the buyback, they did not, much as they got the shares out of the market, they've kept them in a treasury account. So they can always bring them back easily without going through a more rigorous process. So I think it's still just held there in a treasury account to see how the price behaves, and probably a new one, they'll be able to release more float in the future. Yep. Any other online, or we go straight to the physical? Okay, very good. Yes. Maybe you can give us your name and your media house.
All right, my name is Brenda Kerubo from KTN News. I just want to know, you spoke briefly about it, the dollar. Could you also give more explanation in relation to this? Just how exactly has it, if it has at all affected the performance? But could you just walk us through exactly what has been happening with the dollar since it started strengthening on the global context?
I'll limit my response to the impact it has on the market, not the impact that it has generally, because I think there are more competent institutions to do that. I think for us, when we see the strengthening of the dollar, what that means is that we see the local investments become more affordable for the foreign investors, because they can get more shillings for dollars, and hence they're able to invest more. The only challenge comes in conversion when they're exiting, so they have to watch on that. But what the international investors do is that they do a lot of a trend analysis and see how the currency behavior is, because coming in is one thing, but exiting is another. So they have to be very, very careful. What we've seen is that with the slight weakening of the shilling, there's a lot of inflow that came through early in the year. International investors were able to take more positions because they can afford more. The assets become cheaper, and they can afford more quantity with the same amount of money. So we continue watching that parameter. I think what has happened, what you're seeing about the low turnover at the moment, is largely driven by more of the heightened risk, especially following the Ukraine war. That's really the sort of holding back or putting your money into what they call less volatile assets like bonds. That's essentially what we've seen happening, as opposed to a currency situation. I don't think the currency factor is very strong in this argument. Thank you. Yep.
Good morning, Kefa Mwirore, Citizen Digital. 3 questions. I begin with your sentiments. I'll try a quote here. You said you don't look at the index drop as a crisis, in reference to maybe NASI and C20 and so on. I think this is not the first time you're insisting this is a buyer's market. And I think since the beginning of the pandemic, You've said it, and of course, we ourselves have seen it. It's a buyer's market, but we are still not seeing buyers coming to market. And I'm curious to know then, what do you make of it? What will make them return? Is it a sense that we've not gotten to the bottom of the curve? In terms of, as you stated, it's an election year. We should see a bit of volatility, but of course, any position left by a foreign investor is taken up by someone else, more likely a local investor. What do you feel the bottom of this bearish run, which I don't know, I would have to check how far back it goes. Today I don't even want to ask about any listing. I'll just ask, where do you feel the bottom will be, and perhaps we see more activity in terms of pushing those stocks prices up and so on. That would be my first question. My second question is, I think you mentioned your investment in the Dutch stock exchange. There's this new kid on the block, EABX, I believe. And I, just since I'm reporting, they are looking to raise capital. So given, I don't know whether they'll be a noisy neighbor, it's something you could take a stake in. They are also talking about going for other products, looking beyond just what was introduced to us as a place for a secondary market for bonds and treasury bills. Do you feel as a frontier market we are at a place where multiple exchanges is the key for us? Where, an NYC and a NASDAQ, we are far from that, I believe, but do you feel it's a bit premature when we see another sort of stock exchange, if I may call it, coming on board and looking to quite expand quite fast, while we are still struggling with what we have already at the moment? My last question would be to Agema. I don't know whether he was only playing MC role today, but he'll still get a question from me. Emma Kiba, how long has it been? It's been 2 years since I last spoke to you about Emma Kiba. We saw, of course, it was a success in terms of getting to the 1B mark, in terms of what was raised from the market, but are there any discussions to bring it back this year at any point? And of course, if you speak to some issues we saw is that the CDSC could not reach some of the account holders. I don't know what went on with that, and has there been progress? I know perhaps CDSC might better respond to that, but if Agema, in your own context or in your own position, if you could respond to that question. Thank you.
Thank you very much. Those are good questions. I think on the first one about the bear, the bottom of the market, there's never a bottom, so I don't think there's any point waiting. As you saw, the index actually did go up all the way up, if I'm not correct, if I'm starting to be corrected. We almost headed to 2,500 at some point. Huh? Correct, right? So what will happen is that you'll see these cycles. They'll be very regular. What has impacted on the index? What has led to that index impact for the last few years? Let's just recall very well. It started off with the capping of interest rates. Do you remember? That led to a 40% decline in market cap, just for the banking stocks. That was some time back. We then segued into the challenges on COVID. Again, the market declined further. But we're now getting out of that. And we saw, after the caps were removed, the markets appreciated up. I think we'll be able to share with you that data. So those dips and troughs will always present themselves. It's how do you take advantage of them. Now, if you may recall, just a few months ago, the price of Safaricom was hitting 40, what, was it 49? 42, sorry. Today it's at 34. How much money did those people make? Equity Bank equally, and KCB and the rest. So these opportunities will present themselves, and that's a good functioning market because it has opportunity for new people to come in, opportunity for people to exit as well. So the functionality is the most important thing. So we are not extremely worried about that. We don't have a very high market. What has happened perception-wise is that a high market shows like there's heightened activity because everybody wants to make sure they're in the party before it ends, right? That's what happens. That's what typically happens. But I think as investors get more and more informed, they will know that you should always take advantage of the low times and exit at the high times. And that's how we'll continue to position this market. We're not going to be saying we're looking at this market that because it's going down, it's actually waiting for the bottom. It's an opportunity. And it'll pick up again. These cycles do come in because some of these discounts are unbelievable. I mean, when you have multiples, banks were trading at a multiple of 5. Banks that trade a multiple of 5 are banks in the developed markets, not banks in the emerging markets and frontier markets. These are very attractive positions. So it is that education and understanding about what presents, how the market presents opportunity that we were going to be selling more and educating the market more. So question 2 is about investing in DSC. Yes, DSC, we took an investment there. We're looking for other opportunities. EABX, well, they'll have to show us the value proposition. We'll be willing to hear, Chairman, I think. If EABX brought up a proposal, I think we'll be willing to listen to it. I think we are looking at investing in related entities, in businesses that we understand better. So, yeah, it'll be interesting to see what they have to offer. Let me comment about whether we have it's time to have a rival exchange. Well, in our view, we think the market was young. We think the market needed more time to grow. But I think this is an open market, so we allow for competition. I think it'll be good. It'll be healthy because it helps us improve our how we serve better, how we innovate better, and I think that's how we are positioning ourselves to also just expand. Like today, we are the market in we're the second market in Africa with the most number of diverse products, ETFs, green bonds, derivatives, all these kind of things, and it's because we believe in sophisticating the market, in developing the market and ensuring it grows. So yeah, I think it's water under the bridge. So now that they're here, we will see how to work around that. On Emakiba, let me comment. Emakiba, the government has decided to relook at how they want the structure they want. They have not yet come back formally to us with how they want it designed. We've shared all the lessons learned and experiences, and we hope that they'll look at how it did very well when it was within the structure that we designed. But we're waiting to see what decision they have taken. Thank you. I think we're running out of time.
Thank you, Jeff. It's an online question. Just an online question, and I know time is well spent. So again, from Julian Sambok from NTV, he said that the CMA mentioned a revised draft offers and listing regulations. Any chance of scaled down costs from NSE? What would this mean for the NSE, the exchange's revenue profile? That's one question. And then the second one, I believe from someone on the USP or the Ibuka program. On the USP, can we have the investment bankers take their fees or charges upon success rather than paying on signing? 2 questions. Thank you.
Okay. Let me allow David to respond to you want to respond to the question on the PLD? I think, yes, we are participating in the public offer listing disclosure regulations revision, and there are a number of things we're looking at that in terms of making the listing requirements more accommodative, even including pricing. But maybe, David, you want to mention what NSE has done to improve pricing of products, especially on day trading. And then, Bita, you can answer the question on Ibuka. Thank you.
So thank you very much. From pricing perspective, one of the approaches that we took is that around the day trading, the NSE gave out a discount of 5% for any day transactions. So which means that the 0.12% that accrues to NSE on every trade, we gave out a 5%, which means that you are levied on the second leg of the transaction at 0.114. Which that means is that it has brought an additional traffic of around 2%, and as we indicated earlier, the expectation is that the other players will come into the wagon and give some incentives. So strategically, you are reducing the cost and looking at the volume. So that's a strategic approach that we've taken. Thank you.
Thank you for the question on the USP. I think it's more of a commentary with regards to paying the transaction advisors upon success of the transactions that are facilitated. At this point, I'll say we are listening and we want to engage and actually see how we can be able to enhance value for both sides, the issuers and the transaction advisors. So we're happy to have that conversation and follow on, and we're open to actually have a sit down with the person who passed that question. Thank you.
All right, thank you very much. I know we had said we'll finish by 11, and really thank you for staying on with us. Allow me to re-invite Mr. Jeffrey Odundo to invite our chairman. Thank you very much. Thank you for the comments and questions.
Thank you. I think we are very opportune that today the chairman has actually come to see us. He's come on a different mission, but I'm happy to see that he's come and found us still going on. Mr. Kiprono Kitoni has been our chairman for 2 years now, and very, very passionate about the market, especially listing of big companies. And I think it's a good opportunity for you to also hear from him. And maybe chairman, just come and this is the media. We normally engage with them on a quarterly basis, and we just wanted to hear from you. Thank you.
Thank you very much, Jeff. Like you rightly said, this is not my event. I just happened to pass through. I've come to lead my team to go and pay tribute to the third President of the Republic, Mwai Kibaki, under whose leadership there was a great renaissance here at the Exchange. So I think we owe a great debt of gratitude to President Kibaki, and for that reason I thought we should go as a team to Parliament to say to pay our final respects to him. I'd also like to use the opportunity to welcome Mbithe, a great addition to our team. I have interacted with her many times in the past, and I'm certain that you will have a sterling career here at the Exchange. And finally, to say that, Jeff, well done again for this endeavor to come out with a quarterly state of the market report like you have done today. And obviously, as a chairman, I associate myself with all the presentations that have been made. And to say that as we head towards the election, let us pray that we will have a dispensation over the next 5 or 10 years that is committed to capital market formation and development and the deepening of our markets. I mean, we are so strategically positioned in so many respects, but there's also been quite a few lost opportunities that we could have used to enhance the position of our market. We are also operating in very turbulent times, not just as a country, but globally, because of what we are seeing happening. I think it's the price increases on basic commodities like petroleum, the basic price increase in fertilizer is going to have significant inflationary pressure, not just on the Kenyan economy, on all frontier economies as well as the global economy. So I will just say that as investors, as individuals, let's brace ourselves, let's be conservative, let's be prudent. But the stock exchange has proven itself extremely resilient, especially during the COVID times. And I'm certain that even as we move ahead through this turbulence, we shall demonstrate our resilience. Thank you very much, and have a blessed day.
Thank you very much, Chairman Kiprono. And also it is good that we actually came here. And I don't know, Jeff, if it would be in order just to observe still a moment of silence in honor of the late President, Mwai Kibaki. Yeah, just for a moment, and then we just observe a moment of silence. Thank you. Thank you. All right, yeah, so we give, of course, honor where honor is due, and thank you very much, Chairman, for coming here and gracing this occasion. So thank you very much, ladies and gentlemen, even for steering the course. We still have some refreshments that are out there, but before you go, I'd really want to appreciate our Chairman, Mr. Kiprono Kitoni, Mr. Geoffrey Odundo, Mr. David Wainaina, Ms. Mbithe Mwema, we have Mr. Kuria, Mr. Fred Ouma, members of the Fourth Estate present, and also analysts that are here. We really appreciate you. I cannot forget to thank and appreciate Ms. Queen Bella Moreidi. She's been very instrumental in getting some of these statistics. Also, we have the teams, Boniface, and the teams that were also working together. We also want to appreciate Ms. Wendy Boit, and she's reminding me, please make sure that you pass by to register. Kindly do not leave before you register. We really appreciate you. So thank you very much. We appreciate Mina and also the team that has been keeping this conversation going on. So the hashtag for the day is NSE Barometer. NSE, hashtag NSE Barometer. Let's keep this conversation going on. For those who ask questions, we still can continue online, and we want to keep the conversation going. Thank you very much, ladies and gentlemen. We call this meeting an end right now. We close the meeting, and thank you very much for your participation. Asanteni sana, and God bless you. Thank you.
My name is Martin Oduoro-Tieno. I'm the Chief Executive of the Leadership Group. This year, we at the Leadership Group are partnering with the Nairobi Securities Exchange to run this board masterclass, which will be a 3-day learning event in Naivasha. As we all know, board leadership is critical to success of organizations, whether in the public or private sector. And so this particular masterclass is going to delve into areas of board governance, board leadership. So we're inviting board members, we're inviting senior executives of companies to come into this board masterclass to share experiences with their colleagues, but also to learn some of the new topics, new areas that can make boards effective and thereby enable companies and organizations to achieve their strategies, achieve their goals and their objectives. I will be one of the key facilitators at the masterclass, together with senior members of the Nairobi Securities Exchange. So welcome, and looking forward to meeting you in mid-June in Naivasha.